Nebraska. You can find an archive of our past webinars and a schedule of upcoming webinars on our website at cap.unl.edu. The 2023 planting season is just around the corner. Producers face a difficult decision environment due to additional increases in production costs, fluctuating commodity prices, unknown fall yields and fall prices, and lots of time between now and fall for unknown events to occur. Navigating this environment is challenging not only financially, but also mentally. Today, we'll speak with two Nebraska producers to discuss important elements describing their decision-making strategies leading to both financial survival and emotional control. The conversation will be open to participant participation. So with that, I'll put Guy on hold since we haven't heard from him, but John Willoughby, a farmer from Wood River, Nebraska, is joining us right now. Hi, John.
Hi, how's it going?
Good. I'm doing very well. We've had an interesting snowstorm the last couple of days, and you've been out plowing snow. It's probably pretty nice to see a little bit of precipitation fall, but it is in the winter, so we have to take it with a grain of salt. So with that, John, what are your thoughts as we go forward into this year? What's the first thing that comes to your mind, and give us also a little bit about how you got here, because we're all on a path to get here in our lives. So kind of give us the 2-minute breakdown of that.
I did right out of college. I worked for Servitech. I was an agronomy ag econ double major from the University of Nebraska. And so I spent 2 years as a crop consultant, and then I went into being an ag lender. I made long-term real estate loans for MetLife Ag Lending. I was out of Southeast Nebraska. And then since 1992, my wife and I have been farming out here at Wood River.
Awesome. So you've experienced a few things. Needless to say, those help you today in how you think about the 2023 season. So what comes to your mind when you think about this upcoming year, and what have you learned from the past?
Well, every year's different. This year appears that we're going to have higher inputs than we've really had almost at any time since I started farming. I mean, probably last year and this year, both. So we're going to need a higher price. I think right now, the prices are at a profitability area. And, so I guess you got to look at, if you sold out right now, you would be at a profit, but there's always that chance you could have more of a profit if the prices go up. So, you're kind of taking a risk right now. If you don't sell everything, but normally nobody sells everything this early in the season. I incremental sell, so I'm never really ever right or ever wrong, because I'm kind of in the middle of the road, because I just incremental sell as I go along.
How does that work with you emotionally on that?
I think it works good for me. That's why I have to incremental sell. Being a lender for 10 years, I look at risk a lot. And so if I can sell part of my crop at a profit, then I've gotten rid of part of the risk. And so that is a lot of the reasons. That's the reason I incremental sell. There's people you work with as advisors, and some of them incremental sales, some of them just hold everything at one time. It's difficult for me to do that. That's not to say they're wrong, but it's just the risk factor. how it works for myself and my personality.
Awesome, awesome. And embedded in that somewhere is also a crop insurance policy.
Yes, we have. We're very lucky out here at Wood River. We have one of the best crop insurance agents really in the state. And I think it's very important that you work with a really good agent. It's kind of like partners. I think it's also important that you have a good agronomy, people that you work with also. So, you just really need to surround yourself with good people, irregardless, if you're a farmer, especially, but really in any business or any endeavors.
Yeah. So in that, what I hear is, we're getting a lot more data these days. We get different sources of income from hedging or crop insurance. So our decision environment is getting much more complicated. And at the same time, we also need better science to figure out how to make those decisions. So surrounding yourself with people who can aid in that, give you insights into those areas, you're feel comfortable you're making a better decision.
I would say so. We range from two to four different market advisors. I would say over the year. I use farm charts. It's only $300. They chart the markets as to see if they're oversold or overbought. You get to see what the market's doing every day. It's a tool to, and they will tell you when to sell and what percentage. I don't follow it completely, but it's kind of a tool that if the market's way oversold, it's like, well, maybe it's a good time to be selling something. So that's one of the cheapest and easiest marketer people that I work with. And then I've kind of changed over the year with some of the others, and some fit me and some don't. I think that's what's important, what really fits you and makes you comfortable.
And so if I'm picking up on your language, you mentioned that they will tell you maybe if the market is oversold or overbought. I think the key there is the maybe, because obviously there's no indicator that's perfect, but you're willing to accept that it's not perfect. And how do you describe that to someone who's thinking, when they're making a decision that it has to be right?
Well, actually, the farm charts are using science, and there's three different moving averages, and it's kind of when the lines cross. You can chart anything. So if you're going to buy a stock, it'd probably be a good thing to wait until it's a good time to get in it, because you move up and down. And so if you're going to buy or sell in a stock, instead of just picking a day, which most people do because they just tell their broker, today's the day we want to do it. But if they put some science behind it, they can get in at a lower price for the most part and get out at a higher price. And so there is a science to that. And it's just a matter of if you want to follow it or not, but it works well for incremental sellers. But then there's other people that'll give you your opinion on other services, if it's a good time to be selling and what their opinion is. And there's always so many different opinions that it can get confusing. So sometimes you just need to look at your cash flow and your financial statement and see that you're getting rid of some risk, and if it just works for your operation.
Awesome. And so yeah, it gets out of then being just a right decision, but a business decision, an operation decision. What as you went through your farming career, what are the goals of your farm? Have you sat down and thought about, what are you trying to accomplish? Both, it sounds like to me you're both thinking in the short run, but you're also thinking in the long run, meaning multiple years. Can you give us some insights into what how you think about those things?
Well, I think everybody tries to be as profitable as they can, but you probably also need to be profitable at a lower degree of risk if you can make that happen. And so but there is a lot of emotion that goes in it when you go to marketing. It's very difficult that if you make a sale and then the market goes up 10 or 20 or 30 cents in the following week or two. I think if it waits 3 or 4 weeks or months, you kind of forget about it and then you're good. But there's a lot of emotions, which you guys well know, working with the markets and with producers, what's that is like.
How do you take last year's emotion, which is pretty rough on a pre-harvest marketer, and continue down keeping your eye on your long-term objectives and continue using pre-harvest strategies, especially after a year like last year?
Well, I think everybody has kind of the system they prefer. And then if that system doesn't work, they tweak it a little bit and they'll go to another system. Unfortunately, sometimes you're chasing your tail. The system, what worked last year best normally doesn't work the following year best. And so that's the difficult part about it. It's like when you do your crop and your agronomy, if you make a mistake one year, you kind of correct it the next year. But in marketing, you're almost better to be consistent for the most part and do it your way. And eventually your turn will come that way was the good way to do it, whether, it's to sell early. So we have a neighbor that sells, he sells most of his crop and he'll wait till after February because normally the market timing isn't good. So he won't sell any corn till March. And so he's looking at the calendar. His dad is completely the opposite. He'll sell 2-3 years ahead. So one of them is usually way, way better than the other one in that particular marketing cycle. And so, but it is ironic how they do it completely different. And so, but at least they're consistent. So their turn comes around and instead of chasing the way you should have did it the year before.
I think that's very important. Is they're looking at the long run then on that, and knowing that in any given year one could greatly outperform the other, but they're not switching to whatever worked last year. That's an important dynamic to keep in mind when you're thinking about marketing is being consistent, and at the same time not exposing yourself to undue risks that may or may not come at any given time. We just the last 5 years or so, the balance sheets were getting a little rougher on average, and then recently that's changed a lot with the profit potential that's been there. Can you give us some insights into that? Going through multiple downturns and then getting opportunities. How do you internalize those, John?
Well, being a lender, I think it's important that you have a lot of working capital. I look at risk that way. I like to follow Dr. David Coles, and he's looking the same way. And so in those years, I look at those years as opportunity. So um, let's say on our agronomy side, when we have those years that there's not a lot of profit, um, I figure eventually the profit's going to come. So that's when we put a lot of dry fertilizer on, because the dry fertilizer is cheap. And it's like, well, the next time um, the market runs, we're just not even going to put, we may not need to put dry fertilizer on. And we do have several fields this year that do not even need dry fertilizer. And so we can save that. And I know that we're a year or two away from profits are going to be very thin, if we're going to have profits at all. So at that point, I could go back to buying inputs and putting dry fertilizer on and so forth at that point.
Awesome. I love the long-term thinking there. When that asset or input's cheap, you're going to buy a little more of it and less as it goes up. But you're thinking about the future years there. That's very important. And I sometimes miss that a little bit. When I'm visiting with growers, they're sometimes more focused on just the current year and not the long run effect. So I appreciate that. I'm getting Ryan's let me know here that Guy may be here.
Yes, is it working?
Hey, good afternoon, Guy.
Well, I'm glad I got here. It took a while, but I'm finally here. So
You're here. So this is Guy Mills. He's out at Ansley, Nebraska, and where I think the internet is not the best.
No, it is not.
So
we have a lot of snow here.
So. A lot of snow. Now, are you benchmarking against Lincoln, Nebraska, or the hills, the mountains in California?
Well, now that could be, it's all relative, isn't it?
Yeah.
But I suppose we got 15 inches last night, so.
Awesome.
Now, I know John a long time. Him and I went to college together, graduated the same year, and it's always good to get to know people like that. There's a lot of in our class that it's not sometimes what you know, but who you know. I know a lot of that Kappa plant got built out of people in our age group there, so it was always very beneficial that we know other people and what they do. So I do marketing a little bit different than most people. I always put out, what is it you want to accomplish? And a lot of people nowadays, even older people, even somebody 40 years old, a lot of times they don't know what they want to truly accomplish. I use a income statement in lieu of a cash flow, and the reason the cash flow is great, but it's more or less like a tool developed by the ag lending institutions. It shows when they're going to get paid back, and one and maybe two when the loan peak is. But an income statement will show profitability. And I always use that. I probably do more counting than most people. I like to do enterprise analysis and track every item on that income statement. I feel that's very important. I look at locking in the margins, for it. For example, like we back up, long term, I wasn't looking at this year, now. I was looking at it 2 years ago. And what I mean by that, when Putin got ready to invade Ukraine, I knew that it was going to substantially impact, the markets, and especially on the energy. So, it's like buying, heating oil contracts to lay off the risk. You see what happened after the pandemic. That was very, and what the Federal Reserve was going to do with Powell, so I knew that was going to happen. So, yes, any land purchases, make sure that the interest rate was locked in. You could sell the bond market there to protect against interest rates, and then, of course, buy fertilizer. So all that went in there. But I look at a lot of different things on how to make a decision. I look at the USDA is a very good starting point. Their economists are extremely good, and they'll tell you where it's at. It's never about if we raise 8 billion bushels or 20. It's really about the last 500 million bushels is really what determines the market. So I look at the carry out off the government reports. Definitely look at the weather. The stochastics, I follow that. I want to know where the funds are. That's very much of a driving, position on that. I look at the season and the seasonality. Where are we at in the season? Because thing about like crop is that it's very easily, it has a seasonality effect to it, and that's pretty easy really, as opposed, to where it has basis and carry and all that, as opposed to like the cattle industry, which is a major difference. They have its own supply and demand schedules for each month. I look at my own goals and then of course the fundamentals in the market. I'll follow the value of the dollar to see where that's at. That's extremely important on our exports. And I look at who has the cheapest commodities in the world, and where does the U.S. rate to other commodities. I look at the price of fuel, and then again, because that's a tremendously driver of where that price be, and this last year was a perfect example of that. I look at the ethanol plant's profitability, and saying are they profitable? Will they be able to give me a higher basis? I look at the volatility of options, and it's something that you really have to watch. It tells you where it's at. The commitment of traders report I follow. I want to know who's trading on the other end. And then, of course, the spreads. The spreads is something that's probably not really maybe understood as good as it should be by those in agriculture, but it will definitely give you a clue on where the market's going. Of course, you have your bull spread and your bear spreads, but I'll follow like the December versus the July, or I should say the July versus December. And that will tell you, is it expanding or not? And that'll give you years like when you have high production, you'll come in and, the front month will be lower than the deferreds. You'll have carry in the market. And like last year, it was different. We had, an inverse carry, with the short crop because of weather and other factors. And then, of course, we had a positive basis. But I do like to store all my corn. You do, and I watch the calls, and then the basis, and then the carry in the market. I have sold, I'm not really probably an incremental seller. I'm able to get rid of the emotion of marketing by using what I would call logic, and that is how do you control the emotion of marketing? And let's just say the young man that has 100,000 bushels to sell, and he sells 10,000 bushels, and it goes up 20 cents. Well, he frets over it, and that should be overcome. And hopefully, maybe this webinar will show people that forget about it, because the other 90,000 bushels went up, so you should be happy. And that's a lot of it. How do you control your emotion by logic? And that's what can be done. And that's why the calls are so important. That everybody says, well, I'd like to get within the top third of the marketing year, and that would be a great goal. And then somebody say, well, I'm 5 cents from the top. Actually, by what I've been doing, if you understand the spreads, you understand the carry, you know what your options are, you can actually exceed the top price of the year. And that sets people back, like, oh, no, that can't be done. And the answer is, yes, it can be done. But you have to really know what you're doing. And, you need to look at where the options are, and you understand what the time decay on the option is, your intrinsic and time value. You need to probably make yourself a chart. So if you're going to buy an option, or let's say a put, you want to know how fast will that decay, because I've seen some statistics on that where it actually, like 80% of most of the farmers end up losing money on a put. So I use what I would probably call a synthetic put, by selling the futures. I have sold, 3 years crops at once. I had a friend of mine, he called me the other day, or here last fall. He says, hey, should I, sell 5 years crops out? And he had an option there, and we discussed that. And the thing about it, you can't control those costs, 5 years out. And I advised him, no, don't do that, because even though I'm what I would describe as a terribly aggressive hedger, I wouldn't do that just because you can't control the cost. And because, $6 is a relative term, and it's something that we really have to watch. There's a lot of other factors that come into play. Let's say let's go back to the 2008 financial crisis. We had corn in that 830 range or 840 range. And when Lehman Brothers went broke, it dropped to under $3 to $2.92. So there's a huge risk there, and we need to learn, how to manage that risk. And so there's all different kinds of risks. But the thing about crops, if you can control your emotions, buy that and be happy with it, and know what you want to accomplish. And I always tell people, what is it you want, and put that on your refrigerator so you look at it every morning, and so you're defined, you're focused. And I don't mean get a cell phone and look at your markets every 10 minutes. That isn't a marketing plan or a business plan. That would be, I would describe that as an obsession. You need help for that one. But so you look at it, and then maybe the weekly charts and what's happening every week, and then really get focused. Since we are in the northern hemisphere and we produce those crops, and that time frame, I always watch the March report. And of course, it tells you your planning reports, and in between then and the June report is very important, and that's probably a very good time to sell.
So in all of that, Guy, it gets pretty complex pretty fast. At some point, you're going to get conflicting evidence from all those sources. How do you make a decision in that? There's also a lot, you signaled out a lot of stuff that's very important, but there's also a lot of noise around us at the same time. So how do you separate the noise from the signal? And
yes, very, very, very good question. And you have to look at your own situation, back to what is it you want to accomplish. And that's why I say that income statement is so important, that if you know your cost, and you can lock in a profit and a very good one, then do it. And it doesn't necessarily mean, because yes, in this day and age, we are in the day of data overload, and that's where we really have to take care of that. And I always say that the best thing we need to do on this data collection, you take data, you turn it into information, then take the information into knowledge, and knowledge into wisdom. And what I mean from that, you got to know, what does it mean to do all this? We've looked at so much data, like how to get 10 more bushels out of corn, and we've all this, but a lot of people have pretty much dropped the ball on the financial analysis. And what I mean by that, you need to fill out your balance sheet. I've heard a lot of farmers say, well, I got to go to my banker to find out if I made money. Seriously? You handle millions of dollars and you don't know how to fill your own balance sheet out, and so that needs to be corrected, and it's not that difficult to learn. We're all in a learning phase. I'm still learning. I learn things every year, and then do your trend analysis. I've done trend. Oh gosh, well, I started farming when I was 14, and I got a trend all the way back into the 70s. So, and then you look at your trend, and then of course look at your income statement. What can you control? I do a budget for each line. And if you can control the cost on each one of those line item vehicles, like real estate taxes, no, you can't. So that's like 100%. You're always in there. Now, repairs or something, you just never know if a tractor is going to break down, or maybe a power unit or something like that. So you can't really control. But fuel, you do have it. And this is the thing. Agriculture, compared to other industries, we have this opportunity to lock in a profit ahead. And oppose that to other industries. I mean, the CME is a great tool, and many people are afraid of it. And the reason that fear comes because of lack of understanding. One farmer told me here, this year, the high price fuel is going to ruin my operation. I just can't stand it with $5 diesel. And I'm done for. Good grief! I said, well, can you lay off your risk? And he said, well, my wife would never let me do that. I said, then let's develop a business plan. I mean, you can either go through the futures like I did on your heating oil contracts, Or, you can maybe go to your local co-op or whoever your fuel supplier is and say, okay, let's write a contract here. I want to protect against rising fuel prices. And when you develop that business plan and marketing, the input costs are just about as important as anything. And that we are probably going to go into a different time period. We had the 2012 and 13 was a tremendously profitable period, and then by like 16, 17, a lot of the working capital had left ag, and then it didn't get better really until the acres adjusted a couple of years later in this pandemic. In 20, then we rebuilt capital again, working capital. Now there is probably based on history, and I'll say only history, is that there's a significant chance that farmers will lose working capital. A friend of mine who is a lender tells me that he's seen a lot of $6 break evens on the flat bottom, and that's what we really need to look at that. Now, another friend of mine worked for 3M all of his life. He was a chemical engineer by degree, but he had a lot of people under him. And he says, "What's wrong with you farmers?" He said, 3M would look at, and this is way before the pandemic, would look at building a mask, and they would look at several decimal points and beyond to the right. And he said, of course, when you print out or manufacture, 2 or 3 billion, a quarter of 1 cent is a lot of money. And he said, we use technology, but now the farmers are guilty of this, and we're about the only industry that will invest in technology that will actually increase our cost of production if we don't watch what we're doing. And it shouldn't be that. Anything that we're into an inflation-based period, we should invest in technology that reduces our per unit cost. And that's the only reason. That's the only way we can combat inflation. We need to keep getting more efficient in what we do. So, and that would be a very significant thing. And it just amazes me that a lot of farmers are willing to bid their profits away just to get land. And I said, okay, like you pay what for that, for rent? And, so you really have to be up and play, because you got to understand the long-term thing on how costs behave. Not just necessarily knowing your cost of production, but you need to know how costs behave on what that investment was. Like you go out and buy that tractor that was $400,000 2 years ago, and now it's $540,000. Okay, that's a significant investment. So how much does that take into account, your following over that lifespan, and what does it do to your cost of production? And then where will you come out, later on, like in 5 years, if we have a continued, let's say, margin compressed period? And those are some of the things I think are very, very valuable.
I agree. We got to keep our eyes into the future about what could come using logic and protecting ourselves from adverse events that we can't see coming yet. John, do you have anything you'd like to add to this from your perspective? I'd love to hear that.
Well, first of all, and I know Guy very well, and he's one of the few people that changes, that he can be profitable every year at the market, regardless of what the market does, because sometimes the people that never sell, they won't sell anything ahead of time. They only sell off the combine, or they store it in their van, and they won't even forward contract to all the way that the people sell 3-4 years ahead of time. And he's unique in that he does very well regardless of the way the marketing year is working. But I would caution, he probably reads more than, if you're in a room with 100 people, 100 farmers, he may read more than all 100 farmers in the room combined. And so I think you're really going to have to do his system. You really need to educate yourself and read up very well. And but but I think if you read as much as Guy reads, probably any of the system, you can probably be successful at any system, if you read well and apply yourself. So I think it makes a lot of sense in what he's talking about.
Thanks, John. That's a
Excellent.
nice compliment. But I would like to add in, I've had a lot of family influence on, my great grandpa always said that you can't outdo any young man that has his back against the wall because they have to think. And, you back up to, let's say, the 1910 to 1914 time period was a very unusual period in agriculture. It was when you could sell a crop of wheat and pay for your farm. And I mean, some of those people, probably the young guys, probably haven't heard parity, but it was in the 80s. But that was a period that, you still had to do it. Now, by 1918, my grandpa tells me some of the banks got in trouble because, guess what? Because of tight margins. But he told me a story. There was a farmer in Ansley that had his wheat crop in that 1914. And he bought everyone a cigar in the town of Ansley because he was celebrating. He was going to pay off his farm. Okay, they had a dance, they had a celebration. He bought cigars. There was only one thing he forgot to do. He forgot to sell the wheat. And I watched that family, and as my grandpa told me to do, it was about later on, and they finally went out of farming. So this is a generational thing. And it's something that you have to control emotions, but you have to watch what happens. And I always respect the older generation. They've taught me a lot just because they went through like the Depression and then of course the 80s. The 80s was actually, but the 80s was a tough time. It just depends on how you went into it. So these are the things that we have to manage for. My great grandpa said, a lot of times the real money in agriculture can be made in the tough times, but he said it will be made at the expense and misery of someone else. And what he meant by that, he says that's a lot of times when you can buy the land. And because there's basically two ways to make money in agriculture. You get out of bed, you take care of your cattle and your crops, and then you buy land, and then since the Federal Reserve was established, that you have like a 2% or so inflation, and that will over time then give your next generation money. So those are the kinds of things I think we need to look at what the generational aspects can be done and apply to agriculture and how people can do that. Now, I got to bring in this emotion deal is a big thing. It needs to be controlled because Dr. Walters, I had 3 friends in the 80s commit suicide, and that was a big impact on me. They were exceptional farmers. They could plant straight rows way before GPS. They got out of bed. They took care of their crops. They just spent too much money on trying to raise a crop, and they had to exit the industry. And this is kind of the thing, and I've heard Buffett talk on this. Like if a man's 90 years old, and you look at your life, and if any time in that lifetime that you run out of oxygen, just maybe for 3 minutes, okay, you're going to die and you're going to leave. Look at Lehman Brothers. I mentioned that. I mean, that was a 150-some-year-old business, and they went out of business. So you have to understand what risks are to your operation, and then some of them you can control, and then some of them, of course, you can't. Like the pandemic, those black swan events, you can't do that. But we have to get into a situation where a person can control his emotions and then avoid those financial pitfalls that the up and down and ebb and flow markets of agriculture, which are very typical. And that's I hope people can realize that and try to handle their emotions.
So what I'm hearing out of that is there's a bigger picture here to be had than just trying to be right. It's
absolutely.
Thinking very much about survival across your lifetime, so you don't run out of the oxygen for the three minutes. There's something else we're trying to attain.
Oh, absolutely, and that's one of the goals. I mean, you can have all kinds of goals, and definitely survival is one of them, so you don't go broke. I mean, but that's a lot of it. You just have to understand, your business and just track your cost and understand what it is, and then just keep track of them over time. And I like to use a diary. A diary is an absolute amazing tool. If if you write down like, okay, this is what it is today. You can write down, why didn't I sell corn today? You just write that down in your diary, and you have to come up with make yourself think. I mean, people today, a lot of them, they get on their tractors, they just go, they're convenient without thinking. And I think, we have to do that. And I don't necessarily, I've always been a tremendous supporter of education. I mean, and how people can learn. But I got one friend of mine, and he reminded me, well, I never got a college degree, and yeah, but he was a worker, and yeah, he owned 60 pivots of ground, and so yeah, very successful. But he learned. We need to be a lifelong learner, and that's what we need to do. We need to take what it is and just continue on. I mean, because I don't look at this year is going to be any bad. I look at probably should be profitable. Now after this, I don't know what's going to happen. There's major trends in the world. We may see, actually, it looks like if you look at the data, we actually might be seeing a trend of population decline. And that's something, if India is going to have more people than China, that impacts our trade. Now, if you're buying that high dollar tractor, and trade goes down and we go back to $3 or $4 corn, well, then that's a difference. And those are those things you just never know what's going to happen. And that's kind of the long-term view of it.
Absolutely. And I think you're referring to there's some reports coming out of the Chinese population growth is going to slow way down. The complexity comes then with does their standard of living increase to where they're demanding more expensive goods that maybe use more inputs, more crops to grow, to feed that changing diet. We are kind of towards the end of our time, and I didn't push this hard enough at the beginning, but if there's someone who has questions, please raise your hand. I believe Ryan will turn you on. We'd love to have some interaction from the audience here. We got one here. Sheila, I believe you can unmute yourself. There you go.
Hello,
Hi.
thank you. Hello, thank you for doing this. I'm Sheila Korth, and I work at Taxpayers for Common Sense. I work from home in Omaha, but our organization is based in Washington, D.C. John, I think I met you at Husker Harvest Days when I was walking around with Mike Korth, so it's nice to see you again.
Yes, I do know Mike. I wondered if you were related.
Lovely. Just wondering about government payments. We've seen those go through the roof recently, and just wondering what your thoughts are on those moving into the next farm bill. Thank you.
I'm leaving that to the farmers here, Guy and John.
Go ahead, John.
I actually do not worry about government payments for the most part. I don't want to miss out on them. So I might position our finances. So if they do put a lid on, you can only have this, we might have enough entities to be able to participate, but I actually don't manage for government payments. And actually, I would just assume that there probably wasn't government payments. And even on some of the cost share, I think sometimes people wait for the cost share. I mean, we were looking to maybe put a drip system in to get cost share on that. By the time we might end up getting the cost share, I think we could have, with inflation, we could have just installed it. We would have been money ahead. And so I think there's a lot of times that the government, what they intend, they have good intentions, but it doesn't work out that well. And one of the things Guy and I talked about was back my predecessor for when I was a lender. So I'm going clear back into the 80s when they had these 3-year loans from Farmers Home for disaster loans. And my predecessor said there was no lending program that broke more farmers than that, because then they would take the disaster money go buy some equipment, and then they'd have to make equipment payments and under conditions that they just couldn't make them. And so I think we have to be careful on some of this help from the government.
Sheila, I would like to add it, put some input. I'd have to definitely agree with John. There's only one reason for farm policy, and a lot of people miss that, but that is to keep the population fed at a reasonable cost, lest the establishment gets overturned. Farmers are expendable, but I just as soon not get any government payments. I would rather take it from the marketplace anytime, because if you look at what happened, like in the 1933 Agriculture Adjustment Act, and then we had the 1938 Farm Bill, and then up to 91 Farm Bill, when it was maybe the freedom to farm, and some people say freedom to fail, but it decoupled that. Then we went ahead to the RFS, and that was something that created wealth for agriculture, and we found out that when we created the wealth, we did not increase the food cost to the people. So that's what we are. As far as that, I would do definitely what I would say a shock treatment. Run it so you can run your farm in the absence of any government payments. Now, here's the deal, what's happening in the world. If you look at, when John was talking about that, the national debt was around $1 trillion. Now it's what? I think they reached the limit today, 32 plus trillion. I mean, that's an amazing amount of money. Like, how much is that? I had 12 zeros and whatever. So the interest on the national debt, as Powell raises the rates, is going to be the largest single item, and that will surpass even the defense budget. So from a farm policy standpoint, the farmers are going to have to craft a message to their elected representatives on why we're even valuable and what is it that we contribute, because the money is going to be very tight. So I'm looking at, yes, we got to run our farms, but in the absence of any government help. Now, we absolutely have to have crop insurance. That's the number one thing. I mean, in Custer County, oh my gosh, we had miles and miles of, there were some people that, planted 4 times on beans, and I've done all mine twice. I planted them, got them up, we got froze, and then replanted them, then we got hailed twice. I mean, so those are the kinds of things that will keep the farmer on the farm. But there is going to the Farm Bill. We're going to have to be very, very cautious on what we need, but we definitely need the crop insurance.
Excellent. Got a couple other questions here. We have one from Maureen. I'll read it here. I'm not comfortable selling commodities a year ahead when I don't know what my crop will be like. Do you feel it is smart to simply rely on crop insurance to fill contracts? I only insure 50% as the landowner.
Do you want that one?
I guess I could take that. I think if you're a landowner, you could do, a year out, you could do up to 25 to 50% of what your of what your crop would make, of what your insured bushels would be. So I think if we can get a good price, and I know the price can be profitable, I like to sell at least a year ahead. If the prices aren't very good, I kind of delay my selling as much as I can. So I think the biggest thing is you need to make a decision. I think the worst marketers are the ones that cannot make a decision. But if you can make a decision and follow through, when I was a lender, there'd be people that they just couldn't sell. They just couldn't make a decision, and I think no decision's worse than a bad decision.
And I think what I picked up there, John, is you're making 2 decisions. First is you're willing to sell ahead, and then your second one is you're willing to sell in increments. You're not selling a whole lot at one time, unless maybe the price gets good enough. But for Maureen here, it's selling a small percent of the crop next year, which helps you create then a starting point for your average price that you'll receive that following year.
Yeah, exactly. And if you got some sold at a good price, then if the price goes up, you can sell some at even a higher price and do even better. If it goes down some, you're like, well, if I still average some in, I'm still going to be doing well. Otherwise, sometimes you're just in no man's land if you haven't sold any and all of a sudden the price has dropped a lot. And it's like, well, I don't know if I can make a profit now. So, and that's a lot of times that's where the farmers kind of get into a no man's land. And then and then I think at some point they're like, well, we need to haul corn. I need it for my cash flow. So they just almost kind of just give up and punt and just want to get rid of it, and it seems like when prices are low, it's would be easier to do that than when prices go up. It's like these profits are so high, instead of just selling a lot and making a lot, you're like, well, geez, if I only sell 5 or 10,000 bushels, I'm still going to make a lot on that. And it's almost like our crop is worth gold. So it works on your psyche to try to, it's almost harder to sell corn when it's highly profitable than when there's really no profit in it. And it should be the other way around.
Yes. We're getting short on time. I got one question here that I think is perfect for Guy from Tim here. With all the new bean processing coming online soon, we will need almost 40 million more bean acres. Where do these acres come from?
Oh, that's a very good question. Actually, John and I were talking about that last night. They're saying one possible location is at North Platte. Well, what happened in North Platte? They built a major packing house out there, okay? So you'd think that there'd be a lot of cattle out there and cattle eat corn. They don't do that. But that's a very good question. What's going to happen to the bean acres? And in the end, the market will dictate on where it goes. That they'll dictate on how where the capital goes and how the resources flow. But that is a very interesting thing, and it'd be something that we're going to watch very closely.
How do we watch it, Guy? Do you start buying more land now for this windfall? What are you saying?
Well, I don't know. I don't know if we got to watch what's happening in the world on this land, and what this debt is. The national debt is a very big concern to me, and where that inflation will come out. What happened. Let's go back to the Nixon inflation, where he decoupled gold in the 71. Pickups were 3,000, they went to 9. Land, inflated. Corn was $1.10. People got $3. And my grandma sold wheat early that day, and before she got her check in the mail, the price of wheat had doubled because the Russians had bought wheat. And so that was just one instance, happened in the 70s, and boy, did she ever remember that, But we got to watch what's happening. There's a lot of things that are changing, in the economy. What is the impact of the electric car? What are the climate people going to do on? Are they going to bring about regulations like through an ESG score or your carbon index will be? How are we going to get related? I'm watching the Supreme Court case of the national pork producers versus the state of California. I read their oral arguments here a while back, and they'll probably be sometime in March when they rule on that, and that will impact interstate trade. And that could actually filter back to what happens to the corn here if it's produced as ethanol in Nebraska and sold to California. So I mean, there's lots of things going on. There's a lot of marbles in that bowl, and as Dr. Kendrick taught me years ago, when you pull one marble out, all the rest of the marbles move. And that's probably still an analogy that's very, very true today. But it'll be interesting to see what happens on these bean acres. It really will be.
Excellent. And I think that's a great place to leave it. There's a lot of threats. There's a lot of opportunities. We're going to have some interesting times ahead of us. So with that, I'd like to thank everyone for joining us today. A recording of the webinar will be posted at cap.unl.edu, where you can also register for other upcoming webinars. And we'd also really appreciate your feedback on the brief evaluation at the link in the chat box. I see Ryan just put that up. That helps tell us how today went and inform future webinars. Thank you again for joining us. Thank you, John, and thank you, Guy.
Thank you very much. I hope it helps.
Thank you. Yes. Thank you, John.
Thanks so much.